Happy Tuesday, gang. This is Simba back at it again with another day of some highlights and news on the crypto space. Now, to start it off, crypto giants Binance and KuCoin faced several disruptions due to the AWS outage. Now, Binance and KuCoin temporarily suspended withdrawals due to a network interruption at Amazon Web Services data center. Now, Binance was really quick. They resumed withdrawals within minutes, but users continue to report issues with trade orders on both platforms. Other services like Rabby and DBank also faced outages, highlighting really the crypto industry's reliance on centralized cloud infrastructures, especially AWS, as a lot of services on the internet use AWS. So when AWS goes down, everybody is in trouble. Right. So anyways, with that, this outage really underscores the vulnerability of crypto exchanges relying on centralized cloud providers like AWS. Right. Now, what could help is diversifying infrastructure to really mitigate these issues. And also at the same time, service interruptions on major exchanges can lead to short-term price swings as traders react to the uncertainties and trying to figure out what the heck is going on. Right now, exchanges should prioritize robust backup systems for decentralized platforms during these outages. They need to, they need to see what else they could use in the back end. They can't just all rely on the AWS service. Right now, for users, traders should be prepared for delays and consider using decentralized platforms during such events. There's Uniswap, right? There's Jupiter. Right. So when these centralized exchanges go down, maybe the best use case is really for these decentralized platforms. And that's probably where the future is going. I'm just saying, right? You probably have seen the rise of Hyperliquid, which is a decentralized exchange. It's pretty much a Binance, a KuCoin that is decentralized in that matter. But yes, guys, keep your eyes out and be safe. Be safe, as they would say. Now, the Trump administration eyes tariff revenues for the National Bitcoin Reserve. Now, the White House advisor Bo Hines revealed that the Trump administration is considering using tariff revenues to fund a national Bitcoin reserve. This marks a shift towards integrating digital assets into the United States economic strategy, and Bitcoin is sitting right there at the top. This is driven really by global competition for Bitcoin accumulation. Literally, the whole world, all these nations are now starting to fight to see who can accumulate the most amount of Bitcoin at this point. It's the new gold, and you must have it if you're going to compete in this new age, this new digital age. While crypto advocates cheer the move, experts warn of potential risks, and this really includes high costs for U.S. Bitcoin miners due to tariffs on equipment. So if you're a miner, this may increase the prices for your equipment, for the miners, right? The people who got their miners really early are sitting well right now. They can probably sell it for a profit. Now, the United States Bitcoin Reserve could drive demand and boost the Bitcoin price. Right? The more demand, there's only 21 million. The more demand, the higher the price goes. But tariffs may increase operational costs for the miners. Now, this move really positions the United States as a leader in digital asset adoption, potentially influencing other nations' strategies. You're starting to see the cascade of other nations really start to adopt a Bitcoin strategy, starting with El Salvador. And now Trump comes in as the first pro-crypto president for the United States, and see what he's doing. Other nations are watching. So now the crypto markets may react positively to government adoption, but the thing to really watch is the regulatory clarity is really needed for this sustainable growth. Now, tariffs could inadvertently harm domestic miners, again reducing the US's competitive edge in the Bitcoin mining. Right, but overall, this is phenomenal. This is great. The trend for Bitcoin really starts to grow, and I think this administration is going to be awesome for Bitcoin. This thing, the Noah's Ark is just getting heated. It's just getting started. Now, DeFi leads crypto lending recovery, outpacing centralized finance. Galaxy Digital reports that decentralized finance is driving the recovery of the crypto lending market, with 19.1 billion in open borrows by Q4 2024, which is really a 959% increase from the year 2022. Now, centralized finance lending grew by 73%, but remains 68% below its 2022 peak, which was absolutely insane. If you guys remember that time, it was insane. Now the 2022 peak, due to the collapse of major platforms like Celsius. Celsius was one of the major ones people lost money in. Also BlockFi. People put their money in those platforms to earn a certain percentage of their yield, but better did they know that they gave out their whole bag to get peanuts, right? To get peanuts. It's like, here's a carrot, but give me your whole bag. And when that whole platform went down, so did their full bag. People lost a lot of money, and people are still going through the hurdles of that, and recovery is in process, right? As his lawyers steal all the money, take all the money, but that's another story. Now, DeFi's decentralized nature and strong risk management have fueled its dominance over centralized finance, right? That centralized finance, why do that when you can use DeFi? Decentralized. Now, DeFi's permissionless and decentralized structure makes it more adaptable to market shocks, offering traders a safer lending option, to be quite honest. And regulatory hurdles and past collapses have slowed down CeFi's recovery, but consolidation among the top lenders like Tether and Galaxy could stabilize this sector. With DeFi lending surpassing previous highs, traders should really explore opportunities in platforms like Aave and Compound. Those are decentralized finance that have tested the test of time. They've been here for quite some time, even though they've had some issues, but at least users have not completely lost all their funds, right? And they've been really stable. I think that's a really great option to take a look at those projects and those opportunities there. Now, DeFi's transparent risk models provide an edge, but users must still do their own research on protocols and security. Now, ZKsync suffers a $5 million hack and token dump, and the price plunges 15% from that. Now, ZKsync's admin account was hacked, leading to the theft of $5 million in unclaimed airdrop tokens. Following the breach, the team reportedly dumped over 66 million additional tokens, causing ZK's price to crash 15%. Now, community members allege embezzlement, and it's probably the worst thing that could probably happen, right? Accusing developers of unethical behaviors. With ZKsync has promised a full report, but trust in the project has really been shaken by this event. Now, this hack highlights the critical need for robust security measures in crypto projects, especially when it comes to those admin accounts. This is a problem, right? It seems like every time there's a problem with a crypto project, it's always due to admin wallets, and they need to be held accountable and have the best measures to secure those funds. Right now, the alleged token dump by developers really exacerbates price volatility and erodes community trust, as it should. If the devs can't be trusted to handle the admin wallets, how can they be trusted to lead a project to success, right? So yes, the community trust is definitely going to take a hit. Now, ZKsync's future hinges on transparency and swift and quick action to address the breach and allegations that they currently have right now. Now, avoid knee-jerk reactions. Wait for the official report before making decisions on ZK's holdings. Looking at the price right now, from that plunge that happened, it seems like, the looking at their chart, looks like they have recovered nicely. We'll look more into the details. I hope the team is transparent. ZKsync is a good project, a good team. It's just unfortunate that something like this happened. And he was, yes, they can get passes. They can, they just need to be transparent, let the community know, and just not let something like this happen, because they do have a great product. Now, with that said, guys, that's all I have for you guys today. Stay vigilant. Today's crypto landscape is a mix of innovation, resilience, and caution, from infrastructure vulnerabilities to government adoption and DeFi's rise. The market is really moving at a rapid pace, right? But stay vigilant. Do your own research and watch this trend closely. We're at some of the best opportunities because everybody's so freaking early, right? Anyways, with that said, take care, guys. Much love.